It's Thursday, October 20th, 2016. This is Ron Feinstein, the Consummate Price Behaviorist at New Wave Forecasting with a bit of a recap. And, of course, look out towards tomorrow. Some spectacular market calls today, but starting off with the crude. The roll to December seems to have brought a bit of a change in plan here, and I now believe the market topped on this nominal new high above 52 bucks. So we do anticipate coming into support here the closer we get to $50, as that's where the buyers have been sitting, and I do think the market's going to bounce. But I don't know how big an importance this top may be, but it could be a big one. So we'll see if we can get a 5-wave decline and then look for a 62 possibly or a 78% courtesy bounce, because I do think the best trade here is going to be setting up on the sell side. Although if somebody said, gee, should we be looking to be a buyer here on this test of 50, 25, 50, 15, I certainly would not say no. Okay, it was Thursday, which we knew was report day in nat gas, and boy, did we have a spectacular setup last night or what. I specifically suggested we would see the market possibly trade above 320 prior to the report, and then break down below the 315 level to set up what could be the bottom. And we got right down to 310. I have a feeling that we are probably going to have another day or so of testing this 310 level, and then we'll see if we're really going to turn this market up hard or not. But it certainly was a spectacular courtesy rally call at 320 for a move down below 315, and we'll see if we can get a reversal tomorrow. You know, the market could conceivably have already turned back up, but there's just no possible way for me to make that kind of a claim here. And frankly, I'd rather be way late on this than early. So we'll keep looking for a possibility of a bear trap now below 310 and a tradable bottom, or if nothing else, at least a retest of 320, 322 in the November nat gas. Okay, well, you know, it's hard to say who's right and who's wrong yet on the gold breakout fakeout scenario, but, you know, it's very unusual for a chart pattern breakout to just kind of sit right on the shelf and then pop, although it certainly could happen and anything's possible in this world. But I got to say, I'm standing by my idea here that this is a garbage rally and that lower prices are likely. This sure looks like a top to me. Again, I do think we are ultimately going to be looking at a 1265 bull trap, which is 10 bucks, which would immediately suggest we're going to 1255, if not lower. So again, I think this market could literally just go into free fall at any moment. Staying bearish here on the gold, waiting for a possible breakdown. Well, all I can say is, you know, patience can really pay off. You know, I had the currency, euro currency scenario. Could not have been better. Just could not have been better. Suggested you did not want to be short below 110 in the danger zone. However, that if you did get back above 110.50, you did want to be short. And look at that, 100 points in a matter of minutes. So this probably now a terminal wave. And don't want to hang out too long here on the short side, but we'll look and see for a recovery. And then this might be a tradable low. Don't know yet, but for now, just have to be very cautious because it ought to be a terminal fifth wave, and we'll see what happens on the bounce. Okay, looking at the 10-year, boy, I don't know. This whole rally has been somewhat subdued, to say the least. Haven't really fallen enough to say that it's not going to keep going, and this is starting to look a little bit like a sketchy expanding pattern here. Let me just draw out these little markers here, which would say that the last thing you want to do is get overly drawn into this. So, you know, again, whenever I see these kinds of expanding patterns, I'm very concerned about trading conditions, liquidity, and all those other things. But for now, I've got to say we got to continue to favor the upside, although, I don't know. Again, the tough call, but risk reward, I'd say if you put a gun to my head, I'd rather be long than short, but we'll have to see. Again, this is not working out in an ideal impulsive fashion, so not worth risking probably a whole lot more than the 130 big figure, give or take. Okay, turning into the home stretch here, looking at the stock index futures. The S&P is actually traded well in the sense that, once again, anybody who sold them in the hole below the 2130 kind of got stuck quickly. And here too I noticed what could be kind of an abstruse expanding type of pattern, which in this particular case is actually consistent with the forecast. So I'm standing by the forecast 2147, 2157. I don't want to sound old. Numbers may get stale someday, but they have not changed. So once again, still looking for higher prices in the E-mini S&P. And concluding with the E-mini NASDAQ, boy, it was looks like it's going to turn out to be a spectacular market call today for this, what looks like it was, in fact, the B-wave low of this final ABC sequence that will take us towards 4870 to 4875, which are the same targets I have been talking about here for 3 or 4 days, if not longer. And then we could be looking at quite an interesting setup. So this looks really bullish short term. You can see how we got everybody bear trapped out here early today, and they're just done. That's it. So this market looks much better as it's supposed to than the S&P, and I think we should see 4870 tomorrow. And depending on how we get here, and if I'm right about this, this should not be that hard to catch this turn back down. And again, I've been talking about potential here for what could be a significant selling opportunity. So I'm going to watch this one real time tomorrow. That's it for the day. Ron Feinstein, New Wave Forecasting, October 20, 2016. Real time in the morning, video on Sunday.